Celebrating its IPO today here at the New York Stock Exchange, the #3 food service distributor in the country, Performance Food Group. The stock, under ticker FGC, is now trading, as you can see, at $19.31. It priced at $19. That was below the expected range of $22 to $25. Joining us now, George Holm, the CEO of Performance Food Group Company. Good morning.
How you doing?
I just get an idea of the scale here. It says in the notes you distribute the equivalent of 2 weeks of the total annual consumption of beef, poultry, and pork in this country. So you're big, third biggest.
A little over 15 billion in revenues, about 12,000 employees, and 68 distribution centers.
You're a Blackstone company, and obviously
we are. As our primary owner, we also have Wellspring as a smaller private equity firm also in ours.
I mean, what stands out here is that obviously we've had a huge amount of market volatility. A lot of IPOs have been cancelled. We know there are a lot that are waiting in the wings, and you're one of the first big IPOs to come to market. Can you talk us through that decision to pull the trigger in what are clearly quite difficult circumstances in general for the markets?
Yeah, tough time to do it. Our investors weren't selling any of their shares, so they were doing all primary shares, and just no reason not to go through. Never a good time, right?
But it clearly has cost you. If you came through with an expected price range of $22 to $25 a share,
that's correct,
priced at 19. There's a material impact from the decision that you made. Perhaps, I don't know. Do you feel there is?
Well, we're using the proceeds to pay down debt, so we just don't pay down as much debt as we expected, and we're happy. I mean, our investors are feeling good, so I feel good.
Of course, you do now have a currency, and I mention that because in your area, #1 and #2 tried to get together.
Yes.
And the FTC said no, and they prevailed. U.S. Foods and Cisco dropping their plan to merge.
Right.
What about your ability to continue to consolidate this industry? Do you expect that you will make deals now that you do have a currency, namely a new stock price that you could use to do it if you chose to?
Yes, we not only have that, but we have a much improved balance sheet, using the proceeds to pay down debt. And we've made 13 acquisitions since the acquisition of PFG, and we want to continue. We want to continue to.
You would have been a beneficiary potentially, though, if that deal had been allowed to go through, right? They
Yeah.
were going to divest a lot of stuff to your very company.
Right, that was disappointing.
It was.
Yes.
And so what does it mean now? You got to just do a lot more smaller deals than doing that big one?
That's correct.
But you expect you will?
We expect to, yes.
And what about the owners? When do they exit?
That'll certainly be their decision.
Have they told you? Is it in the paperwork?
They'll do a secondary, sometime after the lockup period is done. And I think as long as we're trading well and continue to improve, that it'll be successful, and they'll probably get out a year, 18 months, something like that.
We have a lot of casual dining customers.
We sure do.
We've seen the split between the protein-based companies and non-protein seems to be getting wider. Steak's huge.
Yes.
I just wonder if you see consumer taste changing anytime soon, or in what direction it's going.
Well, I think people are getting a little more adventurous with what they eat, but it's still the comfort foods that are the big sellers, and we are very large in beef. It's a big part of our business, and it just continues to grow. I mean, people still eat beef.
We got Dunkin' today blaming egg prices, among other things, for their weak comps. Stock's
Yes.
down 11%. Are you expecting more of those big disruptions in supply and price?
We're actually going through a period of deflation right now, so probably not. The egg, I think, that's a kind of a one-off, difficult for everybody, us included. But today, I mean, food pricing is actually very soft.
In an environment where structurally you think more people will be eating away from home, I mean, the outlook is bright as far as you're concerned for the industry.
Well, the consumer's doing better. Employment is getting better. What's particularly good for us is the two-income family. That's when that eating out kind of goes from being discretionary to being a necessity. So we have a great outlook right now.
Good to meet you, George.
You too.
Thank you for your time. George Holm there, the IPO of Performance Food Group Company.
Thanks.
When we come back, awaiting some sales numbers from Toyota and, more importantly, Volkswagen. We've already gotten Audi, which has a surprising number. We'll get to that after the short break.